Hi and welcome to the Market Alert for Friday the 7th of October 2022. So a very important day today, and this headline says it all really. Bonds and stocks falter on flood of Fed speak, payrolls, paranoia. The market shifted hawkishly once again, so that means that they're going to continue to raise rates. That's the feeling and sentiment. And US stocks and bonds declined amid firmer dollar and higher yields after further hawkish Fed rhetoric. They're not letting up, are they? Dollar bid, while stocks and treasuries sold ahead of pivotal NFP numbers, which are out at 130. And September payrolls preview. Bulls need 100k print for the market to alter its Fed expectations, so they're looking for a decline. Those numbers forecast today are non-farm payrolls are forecast as 248, previous of 315. These are out at 130. We'll wait and see what the market does, but I suspect it'll be very quiet up to this point. The unemployment rate is still forecast at 3.7. That's another number that they like to look at. And average hourly earnings 0.3 across the board as well. But this is the number 248, and they're looking for 100k below this, from what I can gather. Gold silver ratio is still moving down, as can be seen here, 82.56 or in that area. As silver continues to move higher along with the dollar. But first, let's have a look at the Dow's reaction yesterday for the day before the NFP numbers and see how it performed. So yesterday we saw the Dow selling off for most of the day. That 20-bar moving average, the 78 area as well, of creating a resistance for the market. Market currently below the 5-bar moving average. We'll just have to wait and see what the numbers are going to be. I'm drawing some fibs, but to be honest with you, it's either going to be good news or bad news. And even if it's bad news, they could turn it around and make it good news and move it back to the upside as we've seen before. But yesterday's action, as you can see, unsettled. The market was in decline with Europe, and then started to move higher, got stuck at the close, and then they brought the market down. They brought it back to the DP, which became a resistance. Once you break these areas, they either become support and resistance, as we've seen before, and prices then moved down to the low of Wednesday, which you can see there. Low of Thursday is already showing activity at this level. We've got a bit of demand at the moment, and looks like we're already going to break this, as can be seen by the daily chart there. So we've got the 38, 50, 62, just in case we get a sharp decline before the NFP numbers. These are the numbers to the downside. On the upside, we're a long way off yesterday's high, that's for sure, which was over the overnight high. It didn't even get anywhere near during the trading session. So a long way back to the high. That can be easily achieved if those numbers come out as they want them to come out to turn the market bullish. We'll just have to wait and see. In the German DAX, similar picture, market trading to 78% retracement, held through there and then started to sell off as the market made its way back down. You'll see from the low to yesterday's high that we're sitting at 38% at the moment. The market's doing its damnedest to try and get back above the 5-bar moving average at the moment. In the 30-minute chart, we sold from the off. We broke through the high. As I said in yesterday's, the high, once broken, then becomes a resistance. The market attempted to come back, found the 20-bar moving average, the high in the way, and then continued lower, went quiet until the Dow opened and then did absolutely nothing, but then moved lower down to the 200 MA overnight, has bounced off this to the DP and the 50 EMA, which are resistance at the moment, and is heading down towards yesterday's close and yesterday's low as I record. In the 5-minute chart, you will see this. We had a decline from 7 a.m. and then the market bounced back up to the BRN there. There's the high from Wednesday. The cash market coming down, going back up, doing a double top, 50 EMA, back to red, and it stayed red as it continued to move down. We had a bit of 3 bars there closing above the 5-bar moving average, but still with resistance for the second leg down to Wednesday's low, where the market then found support. And it's amazing how it'll bounce off the low as it's sailing down to these levels. You think it's going to go through and continue, but you'll be amazed how many times it will actually come back, and then they'll do the damnedest to bring it back, which they did with the Dow. It was the final push to the upside, creating a double top in the market there when the Dow opened, and as the Dow sold off, the DAX followed and actually broke the low, but not for long. As you can see there, they brought it back immediately, and then again it became support once more. So they're desperate to keep the market off the lows, aren't they? And even into the evening, again it broke the low and they brought it back, but you can see it's getting tougher to keep above that low. And overnight we've had a gap which has been filled. We saw the buying coming in there, and once more the market coming back and retesting the low, but this time managing to get above this. But you'll see at the moment it's in range to actually be attacked. However, there's a lot of support here with physical support to the left of the chart. If it drives through this, then we test the close and we also test the low. The results this week so far is 401, another good day yesterday with a nice climb from Tuesday, Wednesday and Thursday, 8.01 for the profit factor and 77.23 there for win-loss ratio. So yeah, not as good as last week, but like I say, didn't get to the desk really until Tuesday afternoon, dealing with other matters in the family, but there we go. It's still a good week, not complaining at all, and today should be a good one from 130 as well. S&P again also struggling with that 20 bar moving average. We've got some supply coming into the market, means there's some selling around, already below the 5 bar moving average there. In the 30-minute chart yesterday, you see the decline with the Dow as the European markets move lower. The rally back yesterday afternoon when the S&P opened in this bar here, then down, then back, and again the DP becoming a resistance area with the 50 EMA as prices then move lower. And you can see we're already at yesterday's low where the market's hoping to find a bit of support. Yesterday we didn't get down to Wednesday's low. The market overnight coming close to it, but the new low is sitting here where the prices are currently trading. In the FTSE 100, also that 20 bar moving average, 62% retracement. The market trying to move back overnight though, you can see that there. And in the 30-minute chart, straight decline down, a good 100 points plus there, down to the 200 MA, down to the low of Wednesday. Thursday finding support at this level with demand, and then stuck in a sideways range in the 200 MA and the close offering support there. So well, actually it's the low, not the close, it's the low which is tucked in there from Wednesday. You can see how that offered support along with demand and the 200 MA as the market was brought back to the BRN, and then has just moved slightly low. But the 200 MA in the 30-minute is well worth watching at the moment. There's a lot of support there for this market. In the currencies, yesterday the dollar strength had an impact on the GBP JPY. As you can see, market coming back. All of the averages apart from the 5 bar moving average all converging there. I think the 200 MA must be somewhere else on the charts, or is it running through the centre of it? Must be running. Oh, it's there. It's right in front of me. Can't see for looking. There it is. So yeah, the 200 MA. An area of support once you've broken through. You can see this on this day here, and then prices moving up. So watch that 200 MA. No separation yet on the 50 and the 20, but interesting nonetheless. It's going to be down to the US dollar today, isn't it? Decline there yesterday as the US dollar moved higher and straight through the low, but then became a resistance. The market trying to get back to the S1 sideways. And at the moment we're at yesterday's close, the low slightly below this. In the pound, again 78, same as the stock markets, trading up to this level. Down day yesterday, back down to 116. Is that one? Sorry, 111. I think that is. Yeah, 111. I say it can't be 116. It's too high. 30-minute chart again showing the decline in the pound because the US dollar was high through the low. Continued through this area, and you can see at the moment at the close, along with the same as the GBP JPY at the moment. And in the metals, the talk of hawkishness managed to see silver hold yesterday inside bar, up on the overnight at the moment, needs to get back above that 20.88, needs to get back above $21 to be honest. The 30-minute chart down to the DP. This became an area of support. Market bounced off this, but then got to the 1 p.m. LBMA smash, market down, and then it was brought back. And overnight prices have been able to move higher again as the Fed speak came out later on yesterday evening, boosting the gold and silver market, which you can see there. Gold also an inside bar for yesterday, waiting for those numbers. The price moved lower during yesterday, but overnight started to come back, but hasn't come back as much as silver, which is why you see the gold-silver ratio moving to the downside. The key is this: the US dollar yesterday moving to the upside, impacting the GBP, JPY, and the cable, and also the metals going with the dollar, which is very, very unusual, which you'll see here in the 30-minute. You've got the dollar. It was up all the way, no red bars apart from this one here at the DP, as the move yesterday just continued apace to the upside. And we can see that yesterday we rallied back to the high of this, which is 112.19. So watch the dollar today at 130. It's certainly going to be interesting with those numbers. And just to recap, they're out at 130 and they're hoping for 100,000 less, from what I can gather from the 315, for it to be bullish for the market. But we'll have to wait and see. It depends how they interpret it. They'll do whatever they want to do with it. But I always look forward to these numbers when they come out. And you can tend, because you can't get the numbers immediately, because there's a lot of other traders on the Forex Factory site. You have to keep refreshing. But if you just look at the price action, you'll get a pretty good idea. And because it's changed, you see, prior to the interest rate rising cycle and the inflationary cycle, you would look for higher numbers. You know, you'd be looking for something higher than 315 to actually be bullish, to send the market to the upside. But because of the inflationary thing, they want actually less jobs created, so that we need a figure less for the market to be bullish. So the whole thing's been turned on its head, and you have to ignore what it says in this, where it says changing the number of employed people during the previous month, excluding the farming industry. Actual greater than forecast is good news for the economy. That's not correct at the moment because of the inflationary cycle and interest rate rises that are going on at the moment. They're trying to slow down the unemployment in the economy to bring inflation under control. So we're looking for a figure less than, we wouldn't get, obviously the prediction is less than the 315, but according to this headline, bulls need 100k print for the market. So actually what this is saying, instead of the 248, they're looking for 100k, which, if they get it, then we'll see the market move higher. But you're looking for the market to be bullish, you're looking for a figure less than that 315. With the caveat, as I say, that the consensus seems to be that they want 100k. We'll have to wait and see, but there you go. That's just a quick interpretation of what they want and what is you're likely to expect to see when those numbers are released. So if it plunges, then the figure's going to be higher, and if the market goes up 100 points on the Dow when it's released and you can't get to see the actual figures, then that's why, because it's going to be less than the 248. Okay, that's it for this one. As we head into the weekend, have a great weekend. And as ever, trade what you see, not what you think should happen. And as ever, thanks for watching. See you in the next one.